Hey y'all, welcome to the filling station. Whew, it's been an interesting day in the market, right? So, listen, we're going to look at the SPY for a minute. I saw some things that, yeah, today with the SPY. So, let me go ahead and give my disclaimer. I am not a financial advisor. I just enjoy teaching people how to build generational wealth in the stock market. It's just one of those avenues. This video is for educational purposes only. With that being said, y'all, let's get started. So, I do a pre-market prep in the mornings, and you know so we gathered, we labeled, let's say, that this SPY on this 30-minute time frame, and we saw that it was consolidating here, which was our gathering spot, right? We marked the pre-market high and the pre-market low. That was made, I did that about 8, maybe 8:15, 10 minutes after 8, and it kind of gave us an idea of how this stock could run the range. And if you look at it now, we are we actually traded within that range. Pre-market, the high was 523.79. We actually made a high of 524.11, but it was still right there in that range, right? That's why it's really important to mark your pre-market high, your pre-market low, and to find those gathering spots, right? Because it kind of gives us an idea of how, or where to we can get in for our trade, or where we can look at to, okay, price normally comes back to that area. That is the point that I want to make today, right? Again, we're looking at SPY on the 30-minute time frame. I'm going to go back down now to the 5-minute time frame, because I want to point out, you know, sometimes if you look at it here, this was pre-market. This is still the 30-minute. This was pre-market, right? SPY broke out of this gathering spot at 7:30 a.m. That is. We came back to the same area at about 2:30, 3, 3:30, 4. We had trouble in this area, meaning that was support, and we couldn't break that area because really that's what it had been doing most of the morning before it broke out of this gathering spot here. So I knew that ATR trail and stop is very strong support. So normally when it comes there and it bounces back to the upside, that's strong support. It bounced off strong support. Or if it breaks through this area, it has broken through strong resistance, right? So SPY gathered here, went up just a little bit, gathered again, consolidated a little bit, and then we went up slightly, got rejected, came all the way back down to the gathering spot from earlier this morning, and we've been hanging right here. It is well after the market has closed, right? But we're right back at this area. So if we break under, the support area was at 522.14. The low of this candle here, which was at 3:30 today, the low is at 521.91. If we break below this area, then we have broken through an area of support. So I would say anything under 521, 522, under 522. So if we open tomorrow under 522, we have broken through an area of support, right? Because that's what's been holding. I mean, we came to this area, left and came back, left and came back again, right? That's how I see the market, y'all. So again, we're right at support. We're right at the ATR trailing stop. We are at the 50 EMA, which is this white line here, is our kind of like resistance support type thing. It's kind of like, seems like it's trying to be both at the same time, right? But this five, we are under the 5 EMA on the 30-minute chart. Let's say that. That's important. And today, the SPY gapped up, meaning we have a downside gap that's going to need to be filled. That's something to think about. So tomorrow when the market opens, if we open under this 522 range, I will be concerned, for the upside moves. I will be wondering if it's going to come down and fill the gap to the downside that was created today, right? That's something to think about. But I wanted to show you how, again, this is looking at the SPY on the 5-minute chart. This is our gathering spot. SPY opened, it went up, made a here, and let's see the high of this candle. I'm not going to say it made a high. It went up and 524.01, and that's how we get the ORB high. That's the high of the day within the first 15 minutes of the market, right? That green line and that red line, that's exactly what that is. And it gives me another idea of support and resistance. So, SPY, when you're trading, you do not, well, let me rephrase that. I do not. The gathering spot here gives me an idea of support and resistance, and I look for breakouts, right? Or I wait on it to break out of that area. But when it broke out, look, it didn't give me a clear signal. There's no way I would have been comfortable trading that. It was a double bottom here. I could have gotten in here and maybe scalped it to the upside, but it's a lot of activity going on right here. And I have the 20 VWAP and the 5, all of that together right there. There it is. The double bottom was here, right? Almost the double bottom, almost. um, and you have the 25 and the VWAP. All of that is right there. So I wouldn't have wanted to trade based on, I knew that I would have trouble ahead. And if you look at the MACD, it's just bunched together. I don't like to trade that. And sometimes if you go in for a quick scalp, it's okay. But this activity here to me is just too much up and down, too much going on. I like to have clear signals. And again, I like my trades to be, I don't want to trade a whole lot, but I want to be strategic and make sure that it's a profitable trade or a good trade. And right here, I don't see that as being one of the best trades for me. Let me say that. And if you're okay with trading that, that is fine. Okay, so what I want to point out on this is we consolidated right here. So from 11:05 this morning till about, let's say, 11:30, it consolidated and it broke out of this consolidation only to start another range of consolidation, right? However, we're moving up. We're making higher highs. I see this line here I drew. It's a trend line. And I tried to connect the points of those candles, like from 1, 2, 3, 4, 5. So we had 5 lines that touched this, 5 candles or wicks that touched this trend line right here. So with that being said, once it breaks under this trend line, that means it has reverse direction, right? So I wouldn't trade it to the upside. I will look to start looking at puts to the downside. Why would I enter? Because we broke out of the trend. It was trending up, in my opinion, right? In my opinion, it was trending to the upside. It gave us higher highs. We went from 520, the low of this candle is 523.03, all the way up to 524.11. Soon as it broke out of this, we closed under the 5 EMA, back to some gathering spot it's still consolidating, or a little bit of up and a little bit of down. And again, that is just not, I don't like to trade that. However, we could have entered the trade based on breaking the trend. This pivot point, I don't know if you can see it really clear right here with the MACD. That would have been an entry for me, because we came up, and as you can see, this candle came up here and got rejected. So I always say that it's like a little pivot. It came back, right? So that candle came back under the 5 EMA. So we could have entered this trade based on, one, it broke out of under this trend line, and it got rejected off of the pre-market high. So that's 2 confirmations. I always try to look for something, not just 1, but 2, to help confirm that what I'm seeing is what I'm seeing, right? So we could have entered this trade, and we could have just stayed in it because it was under the 5. Now here, it came up, it tested the VWAP, it tested the 20, but is that a hammer? No, a hanging man. Is that a hanging man at the top of the move here? Or is that a double top right here? We could have very well, stayed in the trade based on if it would have made another high over this candle. I possibly would have said, okay, it's time to get out. But what keeps me in my trades a little bit longer is looking at my MACD and seeing where my MACD is. My MACD didn't cross. It didn't pivot to the upside. It didn't change or anything outside of it. Stayed there. So it would have helped me stay in my trade here, right? So I would have entered based on breaking the trend under the 5 EMA. MACD is still down. It gave me a little pivot because it tested here, right? And that hanging man, or whatever candle we want to say that is right now, it got rejected here. It gave us what I see as almost like a double top. So that was another confirmation, to continue to the downside. So I would have rode the 5 all the way down. Here's another example of what just happened here, right? But our MACD just did like that little pivot thing. It didn't cross. Now here, we have a crossing of the MACD. So I need to be one, it kind of like consolidated in this area. So if I was scalping the SPY based on what I'm seeing here, I had some reversal candles here. This is a hammer. These candles here are telling me that the SPY is probably getting ready to reverse. And the sharpness, the pointiness right here of this 5 EMA and the crossing of this MACD here, that's a signal for me to get out of my trade. Because if I'm in it to the downside, this tells me that it's probably getting ready to, these candles here tells me that it's probably getting ready to reverse. And my MACD is telling me the exact same thing, right? That's something to think about. So what I wanted to point out is if you're making higher highs and higher lows, draw a trend line, right? The thing is you will have to wait until it breaks under that trend line before you enter your trade. And right here we had a MACD crossing right under where it start coming, where it was breaking from that trend where we were going up here. We have the MACD crossing here to let us know that we are about to reverse that trend to the upside based on the crossing of that MACD. So that's something to think about if you're in trades, or if you're looking at your candles and you can see that you are trending up. Draw your trend line and then possibly wait on your entry. Make sure that you have other confirmation or something else that will confirm what you're seeing, right, to the downside. But breaking this trend and still looking for other clues is what I like to say, or other confirmations. Let me say that. So it was something on Tesla that I wanted to point out. This is Tesla on the 5-minute chart. And I was looking at Tesla earlier, and I think it was on the 30-minute chart. Yes. As you can see on this 30-minute chart here, Tesla, it ran up, got rejected, came down. To me, that would have been the best trade for the day with Tesla, in my opinion. The high of this candle is 178.18. We ran up, got rejected, came down, tested this ATR trail and stopped again. It is very strong support and or resistance, whichever one. It is very strong. Normally the stock will bounce off of that or continue to the downside. With Tesla, we marked the lavender lines as a gathering spot also, and as you can see, it traded within that range, right? So I noticed a bear flag, and if you see the bottom of this candle, I connected this wick with this wick, and I could have drew another line here. Let's see. And maybe that's not the best example of that, but visually, if you need to see a flag, that will be the pole. This is the actual flag. I don't normally do that. What I normally do is how I had it. So I'm going to take that back off, right? So what I do is I take this bottom wick here, and I extend my line out by connecting other wicks with it. That to me looks like a bear flag. That was the point that I was trying to make, that I thought I saw a bear flag on Tesla. So I took the high of the pole, which this is my pole, took the high of the pole minus the low of the pole, and wherever it would have broken out from, I would have subtracted that from the total. And that's how I would have came up with my target. I believe my target at that point was 169 or 170. And we didn't quite make it. Let's see, we got to low of 171.80, and this one is 171.82, which gave us a double bottom, and we did go back to the upside. So the point that I was making is being able to identify the bear flag, and we'll talk about that in another video. I just thought that was interesting and that I recognized that, during my let me look at Tesla type moment, my 5 and 50 crossed right here, which was about 12 o'clock. So if when I saw that after seeing this bear flag and seeing the 5 and 50 cross, I was like, okay, Tesla's probably going to decline. And I do believe I did get in this trade to the downside, and I noticed that Tesla had been consolidating even after hours. It just been, going nowhere. In my opinion, I believe we may have a downside day tomorrow. I'm not sure. Again, trade what you see. Do not take this as any type of financial advice or anything like that. But I would say just trade what you see. Watch your charts and see what your charts are telling you. Apple had an interesting day today. And as you can see, my Apple charts have a lot of information on it, right? I will definitely clean that up soon. I do believe there's some lawsuits or something going on with Apple, and Apple did what it did. It sold off a lot today, and it seemed like the high was that 177.66, somewhere in that area. 177.49 looks like, yes, 177.49. It hit a low down here at yeah, that's a long ways down at 171.83. So it dropped from 177.49 to 171.83. But we knew that Apple had some gaps that needed to be filled just by looking at the daily chart. By looking at the daily chart, it's interesting to look at it from here, right? Look how we went up, and look at this long candle here. And Apple, we are very much close to filling some of those gaps that, to the downside. Apple is an inside week, and we are, if we break below that 170.29, which we could very well do that, tomorrow, and if we break through that level, the target would be 168.49. So that's something to look at. But Apple had an interesting day when it had a lot of selling based on the news, right? And that's very important that we listen to the news, watch the news, and what's going on with your stocks or what's going on in the overall market, and allow that to, at least help you, give you an idea. We talked about the VIX. And my concern is with the VIX, is this a red hammer? It does have a little wick at the top, but is that a hammer or an indecision candle? We wait and we see. We just wait and see, right? So that's on the daily chart. If it is a hammer, we could very well reverse and go back to the upside, which will in turn bring the SPY down. I always say VIX down, SPY up. And we are consolidating here, so that's something to think about. That is a green hammer. We very well may reverse back to the upside from here, because we did hit a low of 1240. Let's see. Yes, we did hit a low of 1240. We could very well reverse from here and go back to the upside, which will again bring the SPY back to the downside. So that's something to think about, y'all. So what we just went over was how we marked the gathering spot and how we wait on those areas to give us a signal to the downside before we make our entry. We use a trend line to help us with being able to enter a trade based on the reversal of the trend, and having confirmation with our MACD. And yeah, that would be an entry. And other indications, making lower lows. There's other things that you can look for. So that's interesting, right? And then we looked at Tesla, where I noticed the bear flag on the 30-minute chart, and it did reverse to the downside. A bear flag means it goes down. The bull flag means it goes up. And normally bull flags are at the top, and the bear flags are at the bottom. That's something to think about. So y'all, I hope this video is very, very helpful. I am super, super excited. We learn and we grow together. Thank you so much for taking the time to listen and learn. Let me say that tomorrow will be an interesting day. I always say trade what you see, right? Don't rush into your trades. Let your trades come to you, and allow the charts to show you what's going on, right? So until next time, y'all, be blessed as well as a blessing unto others.